Previously, I said that Palantir was overhyped. However, long term, it's very likely that the price is going to go up. And even though it has a valuation of $150 billion, it is possible that in the future, its valuation dramatically increases. I want to show you a trade using options where you can profit off the upside potential and still acquire shares if you believe that Palantir right now is overbought. And the way that we would set this up is you would choose an expiration. I prefer using long-dated expirations when making a bullish play, because when an option expires 2 years out in the future, it's very difficult for the market to price that. As a result, from my experience, if you're long-term bullish on a stock, then it makes sense to purchase a leap. I'm using the Power E-Trade app. And if you wanted to buy January 2026, then that's completely fine. If you wanted to purchase the January 2027, then that's completely fine also. Let's use the January 2027 as an example. What you can do is you can purchase the 70 and then you can sell the 95. If the market was open today, I'm making this video on Thanksgiving, so therefore the 100s are not populating. But this will give you $25 of upside, and you're going to pay around $6.50 for this. So the way to mitigate the $6.50 that you're paying for the $25 of upside would be to sell a put option. So in this situation, I can sell 2 of the 35s. Now, in the worst case scenario, this would allow me to own Palantir at $35 a share, and I would be able to manage this position if the market crashes in the future. I'm not going to be able to roll down this $35 to $20, although I guess I could if I wanted to be super aggressive in my rolling. But it's more than likely that in the worst case scenario, I'd be able to roll this down from $35 to $30, and then I would take ownership and then sell covered calls against it. So the way I would set up this trade is I would buy the 70 and I would sell the 95. This would give me a call debit spread, and then I would finance that by selling 2 of the 35s. This would give me a credit of $220, and my maximum profit on this trade would be $2,500 plus the credit that I receive. If I wanted to be a little bit less aggressive with this trade, then instead of selling the 35s, I can sell the 33s, and then this will give me a credit of $22 for every time I made this trade. But I feel comfortable selling the 35s because that would allow me to collect $220 of premium right now, and it would also give me $2,500 of upside potential, and it would also allow me to own Palantir and to get assigned the shares at a strike price of $35. As you can see, I'm already long 6 contracts of the January 2027 70 call strike, so I do already have a long-term bullish position on Palantir, which has showed me a very large profit so far. But I just wanted to help you out and show you how you can structure a trade where you can capture the upside potential, and in the worst case scenario, you can own Palantir for around a 40% discount to where it's currently trading at. If you have any questions, leave a comment below. If you like this video, then you'll love this video that's popping up on your screen right now.